Yeah. Hello and welcome to one and all. In today's class, we will continue with the first unit, the basic concepts of economics. So there are certain terms which are used in our ordinary language, and in economics, those terms they give a slightly different meaning. So if you understand what those terms exactly mean in economics, then in the next chapters we will be able to deal with all those terms properly. Okay, so you have to understand certain terms clearly what it is meant in economics. So that part is the basic concepts of economics. That is the next topic in your first unit. Okay, so these are all the uh, some of the concepts which you have to understand clearly. The first one, goods. Second, wealth. The third one is income. Fourth one is utility, value, price, wants, and finally, welfare. So if you understand these concepts clearly, so in the next topics when we are dealing with all these terms, it will be easy for all of you. Okay. First, let me start with the first one, goods. Okay. So now goods, I mean, any article or any item, that's what we mean in the ordinary language, isn't it? So this, as far as economics is concerned, goods is that anything that satisfies a human want. So goods, all the, sorry. So goods in economics, all things which have value and which can satisfy a human want. Okay? All the items are articles which are having value and which are capable of satisfying a human want. So they are all called as goods in economics. Okay. So there are certain classification of these goods. These goods are divided into different types. So let us see what are all the classification of goods. So the first classification, the classification of goods based on supply. So based on the supply of goods, goods are classified into free goods and economic goods. Okay, so the name itself says this is a free good. So what do I mean by that? So free goods, you can understand that freely supplied by nature. So they are freely available or supplied by nature. On the other hand, economic goods, they are man-made. They are not available freely. These goods are all man-made goods. Okay. So since the free goods, they are freely supplied by nature in abundant quantities. So their supply is always greater than their demand. Whereas when you come to the economic goods, since these commodities are made by man, they are scarce goods, or in other words, their supply is most of the times or always lesser than their demand. Okay. And then going by the same point, the feature, it is freely supplied by nature, the free goods. They don't have any cost of production. So these goods don't have any cost of production. Because they are not having any cost of production, they do not have any price. They don't command any price. But whereas when you come to the economic goods, since it is made by man, it involves have cost of production, and they also command price. Okay. And these goods, for example, you take air, sunlight. So these goods are in abundant supply, but still they are all of great usefulness to the mankind, isn't it? We cannot survive without air or sunlight, but you cannot exchange it. You cannot purchase it, isn't it? So these goods, they have only use value. So these goods have only use value, that is called as value in use, or it is also called as utility. So they have only the use value, but they cannot be exchanged. But whereas when you come to the economic goods, any commodity, car, mobile phone, pen, pencil, etc. So all these commodities, any commodities, you can give it as an example for economic goods. And you know that they have both, they have the utility, and you can exchange these goods in the market also. So that means what? These goods have both utility, usefulness. That is what we say, the term used is value in use. And you can exchange these commodities in the market for money. So that is what we call it as value in exchange. Okay. I'll just write here. So economic goods have both value in use as well as value in exchange. That is, these commodities can be exchanged for other goods, or these commodities can be exchanged for money. Whereas that is not possible in the free goods, since they are freely or abundantly supplied by nature. But still, they have tremendous utility to mankind. So they have only the use value or the value in use. Okay. So, and this classification, sometimes it might change. Normally, we say water is a free good, but nowadays we all know that water is no longer a free good. We have to purchase water also. So depending upon the circumstances, the same free good might become an economic good. That means you have to pay price. But an economic good will never become a free good. Okay. Now this is the first classification. This is based on supply. Now the second classification of goods is classification of goods based on transferability. So this classification is given by Marshall. So it can be termed as material goods and non-material goods. So what do I mean by material goods? So material goods are those types of goods which can be felt. You can touch it, you can feel it, you can see it, and can also be transferred. So all those types of goods that can be seen, that can be felt, that can be touched, and that can also be transferred. So they come under the category of material goods. So again, any physical article, pen, pencil, any example you can give. So they come under the category of material goods. And whereas the non-material goods is just the opposite. So these type of goods cannot be felt, seen, touched, or transferred. So they come under the category of non-material goods. So basically, example, you can say the services. So the services of teachers, doctors, lawyers, etc. So these are all the non-material goods. You cannot see it, you cannot feel it, but you can get that service from that respective professional, isn't it? So that is the difference between the material goods and the non-material goods. Services are also called as the non-material goods, or there are another classification, the same name is tangible goods. And so these are all tangible. Material goods are also called as the tangible goods. This one, non or intangible goods. So that is the second classification. Okay. Now, next, the third classification, based on consumption. So classification of goods based on consumption. So based on consumption, goods are again classified into three types: consumer goods, producer or capital goods, and intermediary goods. Okay. So now I'll first start with an example. You can understand the difference. So example, let me say, give for consumer goods, let me give some example like fan, car, etc. So there are some inputs required to manufacture this fan, car, etc. Isn't it? So they come under the category of, you need, for example, machinery, you need labor, you need tools, you need the factory buildings, isn't it? So they all come under the category of producer or the capital goods. So what is the difference here? Directly you can go and purchase a fan, directly you can go and purchase a car, etc. But we as a consumer, we are not purchasing the machinery, tools and all directly. The producer is purchasing all those machinery and tools. And why he is purchasing all those? Because he has to, since we are demanding fan, he has to manufacture a fan with the help of the machinery. So he has to purchase all those required machinery and tools, etc. Okay. So this one, fan, car and all, we, or the consumers, we purchase directly as these goods directly satisfy our want, isn't it? So these goods directly satisfy our wants. Okay. But this one, producer is, we are indirectly purchasing. If we demand more fans or more cars, then producer will also demand more of those kinds of machinery and tools. Whatever the consumer goods which we are demanding more, those type of machineries will be demanded more by the producers. So these goods, basically, what are the producer or capital goods? So these goods, they help in the without the machinery we cannot produce the consumer good, isn't it? So these goods help in the production of consumer other, or basically consumer goods. So these goods, capital goods, basically indirectly satisfy our want. We might not be directly demanding machinery. So if we demand a particular consumer good, automatically the machinery required for the production of that particular commodity will also be demanded more. So we are indirectly demanding these goods because these goods satisfy our wants indirectly. So that is the difference between the consumer goods and the capital goods. Okay. Now, the consumer goods, they are again divided into necessary goods. Let me move on to the next page. So consumer goods, they are again divided into necessary goods comforts, and luxuries. Okay, so necessary goods, the name itself says these goods are extremely necessary for our survival. Okay, so like for example, food grains, let me take rice. So these are very, very necessary commodity for our survival. So we are willing to pay whatever the price for this particular commodity. Why we are willing to pay whatever the price for this particular commodity, all the food grains for that matter, because their usefulness to us is much, much more than whatever the price we are paying for this particular commodity. So basically all the necessary goods, they have that utility. Utility means the usefulness. So the utility is greater than the price. Okay. Now next, coming to the comforts. So these comforts, they might not be very necessary for us, like the food grains, but then it will help us to improve our efficiency. If we have these kinds of commodities, it will help us to improve our efficiency. Say for example, having a fan, it is not necessary, but still we can survive without fan. But can we do it? But with fan or with chair or table or whatever it is, our efficiency will keep on increasing. Okay, so they might not come under the category of necessary goods, but these comforts, they help in the increase of efficiency of the people. So those kind of goods, they come under the category of comforts. And then next come the category of luxurious commodities. So luxurious commodities, they are totally not at all necessary, but then it shows the status. So if I'm giving costly cars, jewelry, anything, any example you can take. So they are not at all necessary, and their utility is, we can ultimately, totally we can survive without these costly items, but still people purchase this to prove their status. Okay, so utility is much, much lesser than the price, unlike the necessary commodities. Okay, so this also changes from time to time and from person to person. So if I say, for example, if you say a car, if you take a car is a, if you, for the category of the consumer or a student, let me say car for a student, it comes under a luxury. But for a teacher, the same car will become a comfort. But for a doctor, it is emergency, it's necessary, it becomes a necessary, isn't it? So according to the circumstance, and AC and all once upon a time was considered as a luxury, but now AC and all, it comes under the category of comforts. Very soon it will become the necessary also. So depending upon the time period and depending on the person, the same commodities might vary from one person to another person, and also from time to time. Okay, and then the next category which I mentioned to you is the intermediary goods. So based on consumption, three types: consumer goods, producer goods, and the intermediary goods. Okay. So intermediary goods, these goods are neither, they are the unfinished goods. First thing, they are the unfinished goods, unfinished or semi-finished. So they are the unfinished or the semi-finished goods, and these goods are still in the process of production. So they are in between the raw materials, in between the first stage is raw material and the last stage is the final good, isn't it? So these goods are in between the raw materials and final goods. So the raw material has to be processed, and then only we can, it has to be converted into finished commodities, isn't it? So these intermediary goods, they come in between the raw materials and the final goods. See, for example, you take cotton. So cotton is a raw material. And then cotton is converted into yarn, that is an intermediary good. And this yarn is converted into fabric. Then that becomes a final good. So these intermediary good, they occupy the stage in between the raw material and the final good. Okay, like for example, so many examples you have: cement, brick, steel. They all come under the category of intermediary goods. Okay, and again, a particular commodity, whether it comes under the producer good or a capital good or intermediary good, that also depends upon where it is used, who is using it. If, for example, if you are staying in your house, your own house, if you are staying in your own house, then that house will become a consumer, come under the category of consumer goods. But the same house, if you are renting it out to someone else, and then the same house will become a capital good for you. Okay, and the same thing, for example, intermediary good also. See, you, the wheat, for example, you take wheat. Wheat is a raw material, and wheat flour will become the intermediary good. And finally, whatever from wheat flour you are making rotis or chapatis or whatever, that will become a final good. So this is becoming a wheat flour is becoming an intermediary good, and this is becoming a final good. But then if the wheat flour in the house, it is converted into, it is made into a puri or chapati, then it becomes a final good. But then if the same wheat flour is in the bakery, wheat flour is in the bakery, then the same intermediary good will become a capital good. Okay, so depending upon the circumstances on you who is using, the same commodity might change into a final good or an intermediary good or a producer good or a consumer good. Okay, so anyway, and this is based on the consumption. This classification is based on the consumption of a commodity. Okay, the next classification is classification of goods based on durability. So based on durability, again it is classified into two types: perishable or single use goods. Another type is the durable goods. So perishable or single use goods, these type of goods can be used only once. You cannot use it again and again. It can be used only once. See, for example, you take milk or all food grains. You can consume it only once. So they all come under the category of perishable consume milk or food grains. So they all come under the category of perishable consumer goods. Or if you take raw materials like seeds, fertilizers, they all come under the category of perishable single use capital goods. Coal, fuel, they all cannot be used again and again. They can be used only once. So they come under the category of single use capital goods. So this is also called as the mono period goods. Okay, and durable goods, these goods can be used again and again. Their value does not perish in single use, so can be used again and again over a period of time. So they come under the category of durable goods. So for example, pen, chair, all those examples, they all come under the category of durable capital goods, durable consumer goods. Or if you take factory buildings, plant tools, they all come under the category of durable capital goods. Okay, so this is durable goods. They are called as the poly period goods. So basically, Single-use goods or the perishable goods, they can be used only once, either in consumption or in production. Whereas durable goods, they have the durability, so they can be used over a period of time, either by a consumer or by a producer. So that is the in that come under the category of durable goods. Okay. Now this is how the goods have been classified. It's the first concept, first basic concept. Then the next concept is, the second one is wealth. So wealth is something we all know, like property, money, jewelry, they all refer to wealth. So wealth refers to any stock or the value of assets, to the value of assets possessed, possessed by an individual or an institution, or an institution that is capable of yielding an income, yielding a certain amount of income. So that is what is called as wealth in economics. Okay. So this wealth is in the form of, so this wealth can be in the form of stock of assets. Highlighted, stock of assets. So example, it can be in the form of money, it can be in the form of property, it can be in the form of business ownership, it can be in the form of land, etc. So they all, the stock of assets. So they all come under the category of wealth. Now you can see a person or an institution is possessing these kinds of assets. What do you understand by this? It is, we say this person is wealthy, this person is rich. So why do we say that? Because if a person is owning these kinds of property, these kinds of assets, then it implies that he is having that, he or she or that institution is having that financial freedom. At any point of time, they can utilize these assets for their own lifestyle, to suit their lifestyle. They can use all their assets, so they have that kind of financial freedom. So that is why we call them as wealth. Okay. Or any person is a wealthy person. This is how we are calling. So they are not affected by any market changes. Like other day I explained to you about what is depression, what is recession. So during those time periods and all, they can easily utilize these properties or assets. They might not be in the form of flow, they are in the form of stock, but they can be easily converted into money. Okay. So this gives a certain amount of financial freedom to all those people who are owning these kinds of assets. And there are certain characteristics of wealth. So if you have to call a particular asset as wealth, it has to satisfy certain characteristics. So the first characteristic is, it should have utility, meaning usefulness. It should be, it should be scarce. So all these people, they are possessing that scarce economic goods. That's why they are all wealthy. So it should, the second if the supply is more, then the value decreases. Only when the supply is less, the value of the commodity increases. So relative to demand, related to supply of these commodities, they should be scarce in supply in relation to demand for the commodity. So the second characteristic of wealth is scarcity. The third characteristic is exchange value. So these commodities should be capable of being exchanged. And then the fourth characteristic is, they should be capable of being transferred. So the transferability. So if you are owning a land, you cannot physically transfer, but ownership can be transferred from one person to another person. So these are all some of the characteristics of wealth. But see, this transferability, every type of wealth cannot be transferred. So For example, you take the efficiency of the labor. So efficiency of a labor is its own wealth. So if the firm is having efficient or skilled workers, then that firm is having the wealthy labor force. So that cannot be transferred. Whatever the skill of a person, that cannot be transferred from one person to another person. So in order to rectify this, in order to include that also, they have divided into something called as tangible wealth. So all the assets, jewelry, uh, any physical property which can be transferred, physical assets that can be transferred, they come under the category of tangible wealth. And there is another one, intangible wealth. So intangible wealth is the skill of the people. If you term the country as a whole, that is called as human capital, which cannot be transferred. So human capital is whatever the talent possessed by the labor force in the country. So they come under the category of intangible wealth. Okay. So this wealth, it has some classification also. So classification of wealth, it will be personal wealth, whatever the personal assets owned by the individual person, they come under the, for example, gold, money, they come under the category of personal wealth. Then you have the social wealth, all the parks, libraries. So they all belonging to the society, isn't it? So they come under the social wealth. Then you have the national wealth, whatever the national assets you have, the mountain, rivers, mines, whatever the assets, petroleum, whatever it is, within the country, whatever assets you have, they come under the national wealth. And you have the international wealth. So international wealth, like petrol and all, it belongs to the whole world. So they all come under the category of international wealth. Okay. So this is the classification of wealth. Okay. Hope it is clear to you. So next video, I will come up with the next topic, that is income. Okay. Hope this is clear to all of you. And if you like this video, please like, share, and subscribe. And please put in your mention in the comment box whatever your doubts and your suggestions also. Okay. Until my next video, please take care. Bye bye.